Hello and welcome. Today we're diving into something that's totally rewriting the rules for millions of people around the world: AI's role in microlending. It's a technology with the power to unlock incredible economic potential. But, as you'll see, it also comes with some serious hidden catches. Let's get right into it. I want you to just stop and think about this question for a second. How do you do that? It's a classic catch-22, right? It's a paradox that keeps millions of aspiring entrepreneurs literally trapped in poverty. This is the huge fundamental challenge that traditional finance has always struggled with, and it's really the core of the problem we're going to unpack today. So, first up, let's really break down the problem itself. Let's talk about the credit trap. Why has the traditional model, even when it has the best intentions, just not been enough for so many people? Well, the term for people caught in this situation is unbanked or underbanked. But this is so much more than just a textbook definition. This is a real-world barrier that stops a farmer from buying seeds for their crops or a shop owner from expanding her little business. If you don't have a formal financial footprint, you're pretty much invisible to the entire banking system. Now, microfinance was supposed to be the solution, but it's really tough. Just think about the operational costs. Processing a tiny $50 loan can be almost as expensive for a lender as a $5,000 one. And when you have no credit history to go on, you're just looking at a question mark. Assessing risk becomes a complete guessing game. All of this makes it incredibly hard to scale, and ironically, it often means much higher interest rates for the very people who can least afford to pay them. Okay, so this is where AI walks onto the stage. Instead of seeing a total dead end where there's no official file, AI starts looking for clues in other places. It's building what you could call an alternative scorecard from a person's digital life. Now, what's really interesting is this contrast, where a traditional bank just sees a blank page, literally no data. An AI algorithm can see this rich pattern of behavior. It's looking at things like, do you pay your utility bills on time? What your mobile money payments look like? It analyzes hundreds of these alternative data points to find something the old system just couldn't see, a pattern of reliability. And this really gets to the core of the idea. For centuries, a local shopkeeper knew who was good for a loan based on their reputation and their character. AI is basically trying to do the same thing, but on a massive global scale, using our digital footprints as the new way to measure trustworthiness. So, the big question is, does it actually work? Well, let's look at the impact this is having in the real world, because some of the numbers are pretty staggering. So, check this out. In one study in Nigeria, using an AI scoring system led to a 10% jump in successful loan applications for first-time borrowers. That's 10% more people getting their very first shot at building a business. That's huge. And it's not just about giving out more loans. It's about giving out smarter loans. In another study, default rates actually dropped by 15 to 20%. That means the whole system becomes more stable, more sustainable, which means it can help even more people in the long run. And maybe the most incredible change is just the speed. In parts of South Asia, loan approval times have been slashed by up to 90%. What used to take days, sometimes weeks of paperwork, can now happen in a matter of hours. And believe me, when your livelihood is on the line, that speed is absolutely everything. Okay, this all sounds amazing, right? A total game changer. But with this much power comes some really significant risks. We have to talk about the algorithm's blind spots. Look, if the data we feed the AI is already biased, guess what? The AI becomes biased too. It can create a whole new kind of high-tech discrimination. And then you have to ask, who owns all this data? Is it secure? And what happens when the AI, which can be a black box that even its own creators don't fully get, denies someone a loan, and nobody can explain why? These are just enormous ethical hurdles. This quote right here really nails the problem. We could end up just replacing the old world barriers with new digital ones that are way harder to see and even harder to fight against. But these risks aren't a reason to just give up on the whole idea. No way. They're a call to action to build this technology responsibly. So how do we get all the benefits of AI while dodging the pitfalls? Let's look at a potential roadmap for building a fairer future. Getting this right is going to be a team effort. Policymakers, they need to create smart rules of the road that protect people without killing innovation. Lenders have to start demanding AI tools that are actually fair and transparent. And the tech developers, they have a huge responsibility to build these systems for equity right from the start, not just for pure efficiency.
So here's the crucial point, the main takeaway. AI is an incredibly powerful tool, but it is not a magic wand. It will not automatically create a fairer world. Fairness and transparency, those are features that we have to deliberately and carefully design right into these systems from day one.
And that leaves us with one final, really critical question. This technology gives us a rare chance to build a more inclusive financial world, basically from the ground up. The question is, are we going to take that chance? Or are we just going to program all of our old biases into a new and even more powerful system? The choice, really, is ours to make.